Let's have a look at the Glassnode Insights newsletter. Glassnode brings out a new newsletter every single week. So when we go to the website, the link is in the video description. It's insights.glassnode.com. We find all of those different newsletters, which are pretty interesting because they do contain quite interesting data. So we can see on the blockchain what are different actors within the crypto space doing currently with Bitcoin. So let's look at the current newsletter. It's labeled Miner Incomes Under Stress. And in this video, I'm going to go through all of those different charts in the newsletter. I'm not just going to read what the newsletter says, but I'm going to give my interpretation of those different data points that we get here. So it starts off with a pretty simple chart, simply just the price chart. We are currently in this sideways trading range, as a lot of people probably are aware. Bitcoin is not moving much. We are trading between 29 and 32K. And when we go down here, the first somewhat useful chart is the Maya multiple model. Now, this is not necessarily an on-chain data chart. It is rather a chart that just looks at price dynamics. So what we are looking here is the 200-day moving average times a fixed multiple. And when we look at this historically, right, this is a chart that starts in 2013. We can see that the price rarely went below those moving averages or a multiple of that moving average, right? It's lower than the actual 200-day moving average. When we have been that low, it was comparatively a pretty good buying opportunity. Currently, again, we are relatively low on that metric, indicating that we could potentially be rather low, right? It might make sense to dollar cost average into the market. Now, there's so many different approaches with moving averages to try to time the market. You could take shorter durations and then sell whenever the price goes below and buy whenever the price goes above. You could take longer durations, try to estimate the bottom. This is a modification, right? A 200-day times a fixed value over here. What I like to look at when looking at moving averages for Bitcoin is usually the 200-week moving average. Let's actually look at this. So that's now not part of the newsletter, but it's still a pretty interesting relative chart. So this is the 200-week moving average heat map from lookintobitcoin.com. And this moving average was a pretty good estimator of how low Bitcoin can potentially fall, right? So this was the crash after the Mt. Gox collapse. This was the 2018 crash. Here we've got the Corona crash. And currently, when we zoom in a little bit, this 200-week moving average is at 22K. So this could be one potential model to see the absolute bottom. If this holds true for the future, nobody knows, right? But it has held quite nicely for quite a long time. But there is now quite a bit of correlation between traditional finance and Bitcoin specifically, meaning if the technology stocks, they're going to crash further and further more than they have in this time period, then of course this bottom here could also be broken. So nothing is set into stone, especially in crypto. Now let's continue on and let's actually go to something that's really an on-chain metric here. This is the Bitcoin realized price model. And I find this chart very useful. We're basically looking at the transactions of Bitcoin. We are looking at when did a particular Bitcoin move in the past and at what price did it move. And whenever it moves, we update the price of that Bitcoin, meaning when there's a lot of transactions happening, we will update the price very frequently, making this realized price very close to the actual price. If there's not a lot of trading happening, then the price simply just stays flat at the current level. And when we look at this historically, we can see during a bull market, there's a lot of attention on crypto. So the realized price is very quickly adjusting to the current price. So a lot of change. When there's a bear market, there's less trading activity happening, less attention on crypto, meaning this blue line does not change as much. And historically, when we have been below the realized price, we can see again very great buying opportunities. Again, exactly the same 3 points. So the Mt. Gox crash, the 2018 final collapse, and the Corona crash. Currently, the realized price is at 23.6K. So a kind of similar floor to what we've already seen with the 200-day or the 200-week moving average rather. So it's interesting how two very different approaches come to quite similar results. Now let's go to the net unrealized profit and loss, or new pill. And in gray, we see the price in the background, right? This is the long-term chart of Bitcoin on a logarithmic scale. Here, the price scale is on the right. On the left, we've got the net unrealized profit and loss. And here in gray, we see the zero line. This is where unrealized profits and loss had been pretty much balanced. And when there was more net unrealized loss than profit, again, we had been in relatively great situations because those were more or less capitulation events. Currently, we are 18% above the zero line, so we are not yet at a capitulation moment. I would assume that if we hit those 22, 23K in Bitcoin, we are very, very likely also going to see this indicator going below zero, meaning we would have a nice buying opportunity. Now, does this mean we should actually wait until all of this materializes, until we actually see those low levels? I'm not 100% convinced, right? Because nobody can time the market perfectly. I simply just bet on the long-term trend, right? When we look at this over the very long term, Bitcoin is rising. When we use different kinds of approaches, the rate at which it is currently rising, it is less than it has in the past, right? But at the current rate, it's approximately 70% per annum. So I'm basically just trying to bet on that. I'm trying to bet on Bitcoin surviving over the long term, not getting outlawed, benefiting from all of this inflation, meaning fiat will become larger in relation to Bitcoin because Bitcoin is inflating relatively slowly, right? Thus, I think adoption will continue. Bitcoin will further become a part of an investor's portfolio to diversify across different asset classes. That's the fundamental thesis. And I'm not really worried that much about the short-term volatility. But it's good to know the extent to how much it could move, right? And another 50% drop from here is not completely impossible, right? It would definitely be very impressive. I would then very heavily buy, but a 30 to 50% drop, I think is on the cards. I still buy anyways because I can't time this perfectly. Sometimes, right? For example, here in this indicator, we do see turnarounds without this final capitulation. So maybe we are not even going down that much. Bitcoin nowadays is less risky than it has been maybe 3, 4, or 5 years ago, where people still saw Bitcoin as kind of like a Ponzi scheme, as something that goes to zero. That's not the case nowadays anymore, right? Nowadays, Bitcoin has institutional adoption and is regarded as a proper asset class. Let's continue with the cumulative realized loss divided by the realized cap. I don't really like that chart that much. When we look at this historically, right, there was not too much of an indication where the price is peaking or bottoming. Glassnode draws fancy charts over here and says, okay, when we are in a bear market, we might be peaking. Then comes a secondary capitulation, right? AB, and then we turn around. Then again here in 2018, AB, right? A large capitulation, a secondary. Is this now the second time we have our large capitulation here, the secondary here? I think this is kind of like over-interpreting the data, to be honest. I think this is the human brain trying to find patterns where there are potentially none. So I wouldn't take this to the bank, this kind of an idea here. This AB model, I think they also mentioned this before. Over here, right, AB, we hit the Mayer multiple twice before we then go back up again. There's also the Elliott waves theory that might also come in relation to this, right, where you also have the ABC wave. Could be something similar. I don't subscribe to these theories too much. So let's further go on. The long-term and short-term holder supply in profit and losses. When the short-term holders are not in profit, then we tend to be rather low. Currently, the short-term holders are not much in profit either, but we are nowhere near, especially for the long-term holders, as we had been in these final capitulations, right, after Mt. Gox and after 2018 or the COVID crash. Are we going to hit these very low levels again of like 50 or 40% even? It's unclear because the overall volatility of Bitcoin, of crypto, is declining with increasing market cap, right? The larger the asset class becomes, the less volatile it tends to be because people are investing for the long term. And we look at this also just over here, right? We can see that nowadays the fraction of the long-term holders that are in profits is also over the different cycles increasing over time. So more and more people are now buying Bitcoin for the long term, not necessarily for the next week or two, which I personally think is a good strategy. Why gamble too much and sell Bitcoin when over the long term it is increasing by 70% per annum? At least that's the expectation, right? Let's continue with the Bitcoin long-term holder share from supply and profit. So this is only looking at the long-term holders, LTH, and we see this tends to peak during bear markets because that's basically the natural thing, right? When you hold on for a longer period of time, then your purchasing price is further out in the past, meaning you took on more of this early profits. So even if you are down in a bear market like this, the long-term holders tend to be the ones that benefit from this rather than the short-term holders that already exit. Not too much of a sign over here, I think. I think, again, this might be over-interpretation. There's not too much of a correlation, I think, between the price movement and this metric. Let's go to the profit and loss by return bands of the long-term holders. So we can see here that some long-term holders, they had been in really massive losses in the 2018 final capitulation and in the Corona crash. Currently, again, a few of those long-term holders are now in losses. The people that bought in Q1, Q2 of 2021, so that's already considered a long-term holder by glassnode. Those are now starting to see the losses. We are nowhere near yet, though, to these other capitulations. So again, more pain might come. I don't say it will, but it might. We have seen much worse in the past. It doesn't yet look like a total, complete collapse of confidence. And just because people are in losses, by the way, doesn't have to mean that we turn around. We can also just stay in negative territory for a while, right? Nobody knows. Let's look at the Puel multiple. Now, this is not so much an on-chain metric to a certain degree. So it looks at the daily issuance of Bitcoin and it puts this into relation to the average price in the last 365 days, so in the last year. And some people regard this as a metric of how profitable mining is, right? When the average price compared to the last year is relatively low, maybe miners have over-invested. They have anticipated a price that's higher because they didn't expect it to suddenly crash down, meaning maybe the hash rate could decline. The competition among miners could decline. Currently, we are relatively low on this metric, but also not historically low. So again, Mt. Gox, 2018 and Corona, more potential downside is possible. It would not be out of the ordinary. But again, right, in the grand scheme of things, we are cheap. That's why I still continue buying, even though more pain might come, it might not come. But when an asset can be considered cheap historically, then why not buy it? If it becomes even cheaper, great. If it doesn't, also great. Buy cheap, sell expensive. So that's what I try to do. That's why I continue to dollar cost average. Here we've got the miner net position change. Not too much correlation to the chart, but we can see the miners are not stupid, right? They sell into the rallies, they accumulate during downsides or doing sideways movements. Then again, when there is a rally and prices shoot up, they tend to sell. Currently, the miners are selling, so they are not yet bullish on a direct turnaround. So that's interesting, right? It looks like the miners, they are somewhat smart in riding those waves, and they are currently rather offloading. This is another way to look at this, right? So this is not the change day to day. This is the balance. So the balance in the miner wallets, an accumulation here during the downtrend. And then since we haven't seen the rebound, people are simply just selling off, probably not to have too much inventory. And so this is the long-term difficulty for miners, right? If you are getting into Bitcoin mining, be aware that technology continues to move on. The industry continues to professionalize, so the difficulty goes up, the hash rate goes up, the security of the Bitcoin network goes up, the revenue of each individual miner goes down if you don't keep up with the overall development. So that's simply shown in this chart. This difficulty index, right, the orange line, it rarely goes down. It only goes down when we have a real crash. Here it went down because of the miner crackdown in China, but overall, over the long term, more and more hash power gets into Bitcoin. Is there a correlation between price and difficulty? Not necessarily. I think it's rather that a very, very low price might potentially put difficulty down temporarily, because for some miners it might not be profitable to mine at very low prices. But I don't think that the investment in difficulty or in mining equipment has really a direct impact on price. Security is probably the least of the concerns for Bitcoin. The main concern is adoption going to increase? Is Bitcoin continuing to become part of a traditional portfolio next to stocks, next to properties, next to bonds? If the answer is yes, then I think over the long term, we very likely are going to have a bright future for Bitcoin. If you haven't yet subscribed, feel free to do so, because I publish videos regularly. Also, feel free to check out our Telegram group. We are more than 2,000 people over there. Simply search for Bitcoin Strategy Channel within the Telegram app. Last but not least, a like on this video would be appreciated as well. It will help the channel grow. If you're interested in asking me questions directly, then check out the premium membership. There's more information in this video over here. Hope to see you in that video, and thanks for watching this one. Bye bye.